just wanted to discuss this in a little bit more detail to help you understand exactly what's happening. Welcome back to our channel and podcast. My name is Gemma, and here at WIS we talk about all things relating to money, mortgages and positive money mindset. So if that interests you, then be sure to subscribe to our channel and hit the thumbs up. It really helps with our YouTube algorithm and means that you won't miss out on any of our videos. On today's episode of Let's Talk Money and Mortgages, we have Ifti joining us, and for those of you who don't know Ifti is a trained accountant and mortgage advisor who has been in the industry for over 11 years, and he's also one of the founding directors here at WIS. Welcome back, Ifti. How are you doing today?
Hi, I'm very well, thank you. How are you?
Yeah, I'm good, thanks. Today we're going to be covering something that we've seen quite a lot in the news at the moment, inflation, and discussing how this is impacting the mortgage market. Just for everybody watching who might not know, let's just start with the basics, I think. What is inflation, Ifti?
Yeah, going back to one of my classes a few years ago, right, my economics teacher was telling me inflation is too little money chasing too many goods sort of thing, right? So what you can buy effectively, what it actually means is, say for example, something was £100 today. If the inflation is 10% more, you can't buy it for £100 anymore. It's £110, right? So the goods have gone up. So the prices have gone up for stuff. So that's kind of what inflation is, right? Usually inflation is measured. They have, different types of indexes. There's something called a retail price index, and there are various other indexes they use as well. Usually it has a basket of goods, right? So it takes into account about, 15, 20 items depending on the index, and they see, okay, what was the price, last year? And what's the price this year at this point? And if the difference is, let's say, 10% overall, your inflation is actually 10% more, right? So there are different ways they look at it, but this is kind of a very basic way of explaining what inflation is. But obviously, we all know that, the cost of electricity and gas have gone up. I know the government has intervened to give some kind of incentive. Petrol prices are up, have had knock-on effects on food and things like that as well, because all needs transport to get to the supermarket. So we are seeing all that happen, right? So obviously there is clear signs of inflation, and obviously, like I said, in the news, they're always talking about inflation these days. So we are seeing that quite a lot. Yeah.
Now, if we're talking specifically about the mortgage market, how are we seeing inflation affect the mortgage market at the moment?
It is affecting the mortgage market for sure, right? If you take, for example, even the interest rates, right? It has gone up, right? So today a mortgage costs more than what it used to, right? Obviously that contributes towards your thing, right? To your cost, right? So obviously you can't pay the same amount like you used to, right? That is one way of looking at it. But mainly, I think the main concern is how the banks look at inflation, right? So that is the main thing from a mortgage point of view. We find that more and more banks are looking at expenses more in detail, because they look at things like ONS data now quite a lot. A lot of banks do this. A lot of people don't know this. Even though you don't spend much, bank compares you with some average person, right? So the average person might be spending more than you, right? So even if you're careful with your money, if the average person spends more, ONS data will show the average spend, right? So the banks think you're spending more as well, right? And that can impact your mortgage. Meaning, if somebody's trying to buy a house and the bank said, yes, we can give you 200,000, when they look at ONS data, they might turn around and say, actually, we can't give you 200,000 because we think inflation is high, and therefore you have to spend money on other stuff, right? So therefore, we think we can only give you 180 today, right? So they might give you less money. So that's where the biggest concern is, right? For some of the people, because you really can't get the money you want with the mortgage, right? Because this is very frustrating, because I don't blame the banks, but it sometimes is frustrating, because we sometimes tell a customer today that yes, you can borrow 200,000, right? But let's say the same customer finds the house, then they go out looking for houses, come back in 2 months' time, nothing has changed, their salary is still the same, but the banks say, okay, because of inflation, we can only offer you less. So we can't blame the bank. I understand where they're coming from. But at the same time, that guy is going to be left disappointed, because now he's got to find another 20,000 more or let go of the deal, right? So that is a bigger problem that we are seeing more. Some banks do that because, ONS data is very difficult, because sometimes we can't see it, right? Because this is something the banks do in the back end. So we as brokers sometimes don't see it. But there are some of the banks who have sort of incorporated some of these in the calculators. The downside is those calculators have become a little bit more tougher than what they were before, right? So which means you're seeing those results now itself, right? So, if a particular bank had done the change, it'll be clearly showing that the person can only borrow 180,000 and not 200,000, right? But the worst part is if the bank is doing the work in the back end, right? Because that's the bit we can't predict, right? Because, brokers don't have access to ONS data. It's the underwriters who will independently look at it.
Getting your mortgage online doesn't have to be complicated. At WIS, our website will help guide you through step by step. Our fully qualified advisors can help you get the most suitable mortgage for you. Then you can relax, safe in the knowledge that WIS are working in the background to get your mortgage approved. WIS. Online mortgages made simple.
Do you think that's mostly how banks view inflation, or is there anything else that you kind of wanted to add to that, Ifti?
Yeah, it's mainly that's where it's causing problems for people, right? Obviously, interest rates are also, it contributes towards you paying more, right? I think that's a little bit more bigger subject and, it's a little bit more technical, right? It's mainly that's where the problem is, right? Because people are struggling to borrow what they want. The worst thing is sometimes people do have a mortgage, but they want to get a remortgage with a different bank, but what happens is the other bank says actually you can't even borrow the money you want because it's not affordable anymore because the affordability has changed, right? So that is the problem we are finding, right? It's not that the client really can't afford it, because sometimes there are people who are careful with their money, right? But there are people who spend lavishly as well, right? But sometimes when you look at ONS data, they look at like an average person, right? Because if you're below average in your spending, you kind of lose out.
So how then are the interest rates increase affecting people taking out mortgages then at the moment, Ifti?
It's a little frustrating for a lot of people. There was a client who came to me the other day who was on a deal at 1.2%, right? Now, he came and said, look, I want a deal, I want to pay less than what I'm currently paying, right? But he doesn't want to reduce the term either, right? So, or increase the term, right? So no chance. You are not going to get a deal even close to what you're currently paying, right? Because the interest rates have gone up so much. So they are seeing rates which are like, about almost 2% higher than what they used to pay. So we are seeing quite a lot of that. So it is frustrating for a lot of people because, we are so used to living in this 1% interest rate mortgage world, right? So that's no longer around, right? It's changed, right? It's gone back to sort of pre-COVID time, and it's even worse than that, right? It's going back so many years now, right? So people have not seen, right? Especially the sort of the newer generation who's owned houses for the last 5-10 years, they've never seen rates being so high, right? So it is a bit of a shock for everybody. People are not used to it, right? So yeah, so it's a little frustrating for a lot of people, but unfortunately, because the inflation is high, one of the ways that the Bank of England can control inflation is by doing this, right? So that's why we are seeing the Bank of England intervening and increasing the base rate. And obviously, money market rates have also gone up. There are a lot of factors that contribute towards this, right? So yeah, so that has had a lot of problems, right? So hopefully, you probably want to get some advice around this area because it may affect a lot of people, right? Because, some people say, okay, fine, if I can't afford to get a mortgage from X lender, we will stick to the same lender, but you might still not be able to afford the mortgage, right? So you probably want to get some advice around this area before you embark on anything else. Yeah.
Thanks, Ifti. Now, is there anything anyone can do to protect themselves from inflation and mortgage rates going up?
You cannot control inflation. It's not something you can do anything about, right? And you can't control interest rates as well. It's not within your control, right? Because, if the Bank of England changes the base rate or if the bank changes their rate, you don't have control over that, right? So you just don't have control. But there are certain things which you can control to help you, right? Say, for example, if somebody's deal is finishing maybe in 6 months' time, right? There are banks who will give you a mortgage offer 6 months in advance, right? So don't wait for the last month because we don't know what the interest rate is going to be 6 months down the line. Because some people wait for the last minute and they say, come, let's get a deal done, right? So if if the interest rate is 4% at the time, tough. You'll have to go with that, right? So the best thing to do is plan this in advance. Speak to somebody, try and get your rates booked in maybe 6 months ahead. There are banks who offer mortgages 6 months in advance. So if you can do that, that will be helpful. If the interest rate drops, you still have 6 months to go, right? So 4 months down the line, we can review it again and see whether there's a better rate out there. If there is a better rate, we can always go for that, right? If you keep it too late, you may have a problem, right? So that is one thing you can do. And also a lot of people are going for variable rates, discount rates to help them with sort of, this immediate shock, right? Because, if you're going for a fixed deal, it's around 3.whatever%. But if you go for a discount, it may be around 2%, depending on what even trackers are around that rate as well, slightly more than the discounted rates. So those are maybe options you can consider, right? It doesn't work for everybody, right? That's what I'm saying. It's probably best for you to speak to an advisor and get some advice, but it may work for you, right? So it's probably worth planning this in advance. So that's something you can do to mitigate some of these issues. So it's something that you can look at. Always speak to some advisor or speak to your bank if you're not sure, right? Yeah.
Thank you, Ifti, for some more great advice. And just touching on what you just said, if you're unsure if these points are suitable for you, then please do talk to an advisor like Ifti mentioned. And if you don't have an advisor, you can always contact us. We're always more than happy to help. I'll leave our contact details below. Another little reminder that as your mortgage is secured against your home or property, it might be repossessed if you do not keep up with the mortgage repayments. Thank you for joining us again today. We'll be back next week with another episode of Let's Talk Money and Mortgages. Have a great day, stay safe, and we'll see you again soon.